video. I think it'll be good.
Okay.
So let's just go ahead and start recording.
Start recording. Why not?
Yeah. Well, we're about to get some serious stuff there that we should have. All right. Welcome back, guys, to another rendition of the Insurance Panel. It's been a couple weeks. Nick and I have been crazy busy. Even so much so that we're about to not record again today.
Yeah.
But
then we started talking, and then we're like, "Oh, we should just turn the recorder on."
Yeah, we should do it. But like on Monday, you're like, "Hey, do you want to record?" I was like, "Sure." And you're like, "Well, I'm free all the rest of the week because I've already hit my $5,000 for the week." I'm like, "Wait a second, you did $5,000 already?" You're like, "Yeah." Which is interesting, because you were so worried 2 months ago, 6 weeks ago, whenever it was, that you were not. I mean, you knew you were going to make some sales, but you didn't know if you could do like the same amount without killing it.
Yeah. Let's see, where am I at? I'm at 5,500 now. Because I've been busy, but I've not been like talking to prospects. I've actually been busy doing all the other stuff that I've been putting off while I was trying to talk to prospects before. I don't want to keep working like this, but I feel like I could manage to make this work if I absolutely had to. Some things changing would make it a lot less appealing for me. Family benefit, not in my state. They are, because my state is still not fully allowing.
Is it red state?
We're still not allowing face-to-face sales for the most part. Mango Pepsi, guys. He's drinking mango Pepsi.
I bought a 6-pack of them for $4 6 months ago, and they're awful, but I'm committed to chugging them down. So here we go, guys.
But yeah, so we're not allowed to really do face-to-face sales still. On the 5th, that is loosening up a little bit, although it's still somewhat restricted. And there's a lot of ambiguity as to where the line really is as to whether or not you can actually do face-to-face sales.
Probably safer to stay on the phone for another couple
for a little bit. So there's that. But for everybody else, family benefit is not allowing telephone sales anymore as of June 1st. So
I wonder why family benefit allowed Pennsylvania to keep doing it, Nick.
Because we have difficulties that other states don't have to deal with, and nobody's getting special things.
And they love Nick Frumkin.
but it would be very much harder to do this without them. I am starting to find some workarounds for other things. There are a couple of companies out there, and I won't name specific names, but there are a couple of companies out there that technically don't have a telesales process, and like Remiz would not consider it a telesales process because you have to email stuff back and forth to people, and most of our clients, email's not a workable thing. Doing an electronic signature is just not a thing that can really, it's not really viable. But for the right type of prospect, I found that a couple of our companies will accept DocuSign if you want it, so you don't have to necessarily. The companies that would otherwise allow you to mail documents to the client, have them sign it and send it back, they will allow you to, for the most part. I don't think I found any of them that won't allow you to email and using DocuSign, and a couple of other signature carriers. There's a couple of others that you can use, but they're not all universally accepted, and DocuSign seems to be the only one that is universally accepted. There's a company called Ready Signature. Zoho has a signature, electronic signature option. There's a company called HelloSign who runs the eFax program that I use. And so it actually came bundled in with my fax program for free. So I used that. A couple of companies accept that, but DocuSign seems to be universally accepted. It's not terribly expensive.
You're making a great point, because like I'm seeing more and more people saying like, I just can't do this, or like it just doesn't work. Like you can never email something to the client and get it done, and you can.
Yes.
It's a little bit tougher.
Yes.
Right. But it's a lot better than working construction.
Yes. Yeah.
Does that make
Uh,
sense? Like, I would rather have a little bit more time going, Miss Jones, like you need to go to your update folder
right.
and click here and then sign and like at the top, walk them through and then other than standing at a steel mill. You know what I mean? Like
Right.
it's a little tougher, but it's not that bad.
Yeah. And it's not for every client. Like if you're going to be doing anything other than dumping them directly onto a three-way phone call where they do
Right.
a telephone application, you have to feel them out. You have to know, like, hey, is this a client that I could do this with? There's a couple of clients that at the beginning in March, I ended up mailing stuff to have sign and come back, and some of it did, and I mean, some of it did come back, but some of it didn't, and I think a couple of those that didn't I had the thought that I could send them this email document signature process. Maybe that would have worked out differently, and I'd have gotten those policies on the books. But there's some people that, like, you say, hey, do you use your email? And they're like, I don't really have a computer. I've got an email because one came with my smartphone, but I've never opened it up. That's not the person to send something like this to.
Right.
That's not going to work. Um,
Well, I'll even
but
say this, like there's a company that people use for telesales
mhm,
because they take COPD without oxygen level.
mhm,
Okay. The problem is when all this happened, their phones got flooded,
sure, yeah,
like legitimately flooded. And so I've seen people wait 45 minutes, an hour to get onto the phone with the
yep,
company.
yep,
And people are complaining. And then I go, well, there's another company that takes COPD level this year, right?
right.
That does it, that just announced they're going to do telesales again. They turned it
They
off.
used to,
They
yeah.
used to. They turned it off. They turned it back on because they want the business, right?
Mhm,
The only difference is, and it runs through Appical. You do Appical, you do the phone call, you get a reference number, and then all you have to do is send an email. They go to their updates folder. They said, yes, I wanted the coverage, and that's it. And I'm hearing people go, well, that's just so much extra work. I'm like, would you rather wait an hour on the phone, or would you rather
yeah,
spend an extra
yeah.
10? I don't know.
Yeah, and like, again, ideally, yes, you put them into a three-way phone call and it's just done and there's no ambiguity, right? It's just taken care of. That's ideal. Um and if you have the ability to shove everybody into a system that works like that, you can fit everybody in with Royal Neighbors of America and use their fully telephone application system. Great. It doesn't That's not always the best choice for your client.
Mhm.
And one of the things that I struggled with psychologically myself, and it's not a client problem, it's a me problem. Um, but it's one of the things I legitimately struggled with is some of the companies that I knew were legitimately the best choice for my clients weren't available to me. They didn't do telesales.
Mhm.
Since the pandemic started, some of them have changed rules, and now with this situation, maybe I wrote 4 policies with a company that I haven't written since the pandemic started, um, because of the whole being able to email signatures.
Yep.
Um, and I feel better about it. I could have written them with other carriers too, um, but they were people that would not have fit with my number one choice carrier for telesales and the number two choice for them if they weren't going with one of these companies where I had to email the signatures back and forth. The number two choice for them would have been like $40 or $50 a month more.
Right.
And I can't, like, if I know that I have the ability to save somebody $40 a month, again, that's a me problem, but I can't in good conscience um,
I think
sell
it's a
somebody
good
the higher
problem to
price.
have, Nick.
Well, yeah, I think so too. I keep a lot of my clients on the books, but but uh, but yeah. So I can't. So if I have the ability to do that, I do that.
Well, I want to ask you something too. I hear some people say they don't like to use this certain carrier because they only go up to a certain death benefit
mhm,
of $25,000, right?
sure.
Like Royal Neighbors on their final expense,
Mhm,
$25,000 is the limit,
yep.
right? I've been doing final expense for a while.
Mhm.
I don't sell too many over $20,000 policies,
No. No.
right?
Yeah. Most people don't want that much.
Right.
You know, some people do. And so, you've got options. You should have in your own mind an idea of how you would handle that sort of a situation. But
Well, I see, so I'm at the home office today, and they do these things called live transfers, right? So I'm like listening in, and the cool part about it is like I can listen into someone having a live transfer because like it's going to be a call recorded and monitored process. I'm on the monitoring process, which is really cool.
nice.
It's,
Fun.
it's weird. I've never seen it done, but
Yeah.
I'm like, but I can hear him in this other room behind me, and then I hear him on there like right after.
Right.
But I had this girl, and it was a lay down.
Right.
She was like, I looked at 10, I looked at 12, and I looked at 15. Now, out of those, which one of those is the most comfortable for your budget? And the lady was like, all of those are comfortable for my budget,
Great.
but I wanted 25. So what did the girl do? She goes, sweet, 25 is going to be $125.
Mm-hmm.
And the lady goes, nah, that's too much.
Rough.
What I would have done, and what I coached her on later,
Right.
was I would have said, so Miss Jones, like, I definitely can get you the $25,000 that you wanted. It's going to be more. I just want to make sure that this $15,000 that we've already is already enough in your budget, and we can move forward with that before I show you this one.
Yeah, that sounds right.
And then, Miss Jones, I'm also going to give you the $20,000 option so you can see it increments, because the 15 to 25 is going to be a significant jump.
I don't know that I would have thought to do the $20,000 option also, but yeah, no, you're absolutely right. Like, get them to commit to, because, well, and I don't know what their process is on your phone call, right? I don't know. My process is I give them face value dollar amounts based on the budget that they give me to work with. So if their budget that they had given me to work with encompassed $25,000, well, that would have been one of the things that I would have shown them.
How do you? Well, go ahead.
Well, yeah. So if that budget was not, like, if their maximum budget was the $15,000 level, and they were like, hey, I wanted 25. Well, great. We can definitely look at how much more that would be. But
your budget justifies
the budget,
15.
Yeah, but based on what you can afford, this is the amount that we feel is reasonable. And it is better to have something than nothing. $15,000 is an awful lot of money. And it is. Like, $15,000 is a lot of money. I'd take a $15,000 check tomorrow. Right? So let's lock you in on that, and then we can always look on
A year
adding it.
from now, we can definitely,
yeah.
And they'll get it, and then you'll never hear back from them.
Yeah,
and they'll keep
be
$15,000. And the cool part is, like, they wanted 25, but as soon as they got 15, there's a sigh of relief because now they're covered for $15,000.
Right. And the important thing is you always have to, you got to go with we need to get you approved, right? That's all final expense sales. That's your ace in the hole. You hold back the quote until the very last minute, because giving them the quote satisfies their curiosity. And once you've given them the quote, you have to hold back the approval.
Right.
We don't know that we can get you approved for this. We got to figure it out. If you get approved, let's add on. Great. Absolutely. Let's get you approved first. This is what you said you could afford.
Mm-hmm.
Lock that in.
Yep. So the way that I go about getting budget is a little odd, but it works great for me. What I say is, and again, I do it from field. I'm not a telesales guy, so please.
Everything that we're talking about, right?
Right. This works great in the field for me. Ms. Jones, if you're like most of my clients, you're probably on Social Security or disability. You probably get your check on the 3rd, the 2nd, 3rd, or 4th Wednesday of the month, right? And they go, yep, I get it on the 3rd. Cool. And if you're like most of my clients, you probably only make like $1,700 a month. And they're going to go, $1,700 a month? I only get
1,200. Yeah.
Let's say 1,000, right? For easy math. I'll get 1,000. Okay, Ms. Jones, no problem. My company suggests you should only spend anywhere between 5 to 8% of your monthly budget on your filing expenses.
Mm-hmm.
That way you have enough money to take care of everything else, blah, 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 blah. So what that works out to be is $50 to $80. Now, is that comfortable or outrageous, Ms. Jones?
Right.
And if they say comfortable, I've already got to commit.
Right.
Because I'm now going to quote them 52, 67, and 90. And they're going to choose the one in the middle.
Yeah.
They're going to choose any one. But there might be a different way to do it. I mean, I kind of know the way you do it. You're just like, can you afford $200 a month? And they're like, no.
Right. No, I mean, and that doesn't work on the phone because so part of my adventures in phone sales, right? I learned that stuff that I used to do in the house kind of fearlessly gets me hung up on the phone. I'm like, but the way that I was taught to do it is, in the house, you go through the whole thing and you get them to agree that this is what they want, this is what they're looking for, and it's all good and it looks great. And so Mildred, the thing is, it's really important that we put together something that you can keep and sustain for the rest of your life and is easily affordable for you. I don't know what is affordable in your budget. Most of the people that I work with feel comfortable setting aside around $200 a month to get a program like this started. Is that something that would work for you? And then you just wait for them to say whatever they say. Sometimes they say yes, and then you go, shoot, I should have started with 300. But the goal is not to get them to say yes. The goal is to get them to say no. That's crazy. Like, that's what you want. You want them to react. Yeah, you want them to react and be like, 200? Oh my God. And then you can say, no, you're right. No, 200 is a lot of money. It would be too much for me to afford. But how about if we were going to look at something that's closer to like $120 a month? Would that work better for you? And then suddenly 120 doesn't sound that expensive. And then they say, maybe they still say no. And you say, oh, not a problem. What if it was only going to be like $65 or $70 a month? Would that be okay? Well,
and they feel like they're in a car dealership and they're haggling the price.
Yeah. And then if they still say no, then I'll just say, okay, realistically, we can do any amount that you're comfortable with. What would you feel comfortable with on a monthly basis? Sometimes they say $10. Happens very rarely for me, though. Most people, my average policy is $78 a month.
Cool.
You don't get that unless you give them the opportunity to go high. Because I sell some $200 a month policies that way.
Sure. And those are some cool sales tips that you only get in file expense. And sometimes a lot of people look at sales tips.
Oh gosh. That's all right. I'm thinking that's
top 10.
So I'm happy. Yeah, let's do that. We can roll with that. We can roll into this other thing. This is gonna make this a very long video, but I'm okay with that.
That's fine. I think it's good. I think people enjoy it. So I was transitioning for all those, and Nick didn't know where I was going with it. I was transitioning, and we're going to do a video where some guy, I don't know the guy's name. It's probably a video. They're good sales tips, but we wanted to watch the video and break it down and talk about how they're good sales tips. They just don't work for final expense. And the way I transitioned it made me chuckle because I thought it was beautiful. I thought
I was just unexpected. It was just unexpected. He caught me by surprise. That was such a masterful segue that it caught me completely by surprise. I was sort of not expecting we were going to roll into that right now because we had been talking about all this other stuff.
I've been waiting for a chance, but it was good. I think it was a good one.
All right. So this is not to rip on this guy whose video this is. It's a perfectly good video. He's got thousands more followers than we do, like
Yeah.
He's got a ton of followers. This is not the purpose of this video. The purpose of this video is somebody, and I don't know whether they watch the show, but if they do, they know who they are, posted this video in one of the groups as watch this video, it'll help you close more sales. Best of intentions. Best of intentions. And the person, I think, is a perfectly fine person, and I don't think there's anything wrong. We're not calling anybody out here. This is not what this is. But my feeling is it was in a group with a lot of new agents who don't really know a lot about sales. And my feeling is that this kind of information that you go find on YouTube can actually be sort of dangerous if you do not have proper translation to help you apply what's going on. So tip number one. Tip number one, I really dislike, actually. I don't think that's good. Sort of, right?
Yeah. So I'll say this. With final expense, someone told me this a long time ago, and it didn't make sense until like recently. You're wearing, he calls it an acting hat. You have to be able to turn it on and off. Mm-hmm. So like go from like enthusiastic to where at certain points you slow down and you engage a lot more and you drop that enthusiasm.
Yeah, sure.
But maybe you're somewhere different with it. But I'd like to
see no. Yeah, I mean, I would say so. Yeah, I don't know. I don't know. And this is part of the problem that I have with some videos like this is like this guy's leaning a lot on like don't be an old school salesperson. People hate old school salespeople, which maybe I don't know. People hate phonies. People hate people that are transparently fake. That being said,
you can be enthusiastic. Yeah. Okay. Sorry.
No. Dropping the enthusiasm, like, would it be better if you went in and you're like, "Hey, Mildred, I'm here to sell you an insurance policy. Want some insurance?"
Right.
Like, what does that actually even mean?
It's like I guess you're right. I need people to drop the fake enthusiasm.
Sure.
Because I can smell fake enthusiasm, right? Like, I know, I've seen it. I've watched my younger brother that I went to house with, sorry, James, where he was like talking about the dumbest stuff. And I was like hitting him on the leg. I'm like, quit talking about, like, she knows you don't care about her cat.
Well, that I agree with. Like, yeah, like, don't do that. Like, don't. So, I mean, we've talked about rapport building and stuff like that before also.
Right.
Like, you don't want to, you need to be a human being. But at the same time, I was trained originally, and I still believe, like, the way you use your voice, the way that you talk is the most important part of your whole situation. It's got to line up with your body language. There's other stuff that goes into it, but essentially, people who are interesting and engaging speak somewhat loudly and a little bit rapidly and with a lot of variation in volume and pitch.
Yep.
And you can teach yourself to do it, but you don't have to.
Yeah, no, Nick just did it.
But you can teach yourself to do this. Correct. And it doesn't have to be real. Like, it can just be the way that you start to talk. But it's also not necessarily like, I don't know, like, the idea of going in there and being flat and like uninteresting and not interested it just feels like a really dangerous piece of advice. I do like the idea that you shouldn't be phony. You shouldn't be pretending to be interested in stuff that you don't actually care about, like your brother and her cat.
Don't be enthusiastic about things they know you're not enthusiastic about.
Yeah.
But you are enthusiastic about, like, I'm a final expense nut. I care that people, like, when they pass away, that they have enough money for the burial
Yeah.
because it's a real problem. And if I can go in there and by the end of that conversation, like you're worried about budget, you're worried about this, and if I can go in there and go, Miss Jones, by the time I leave here, if something happens to you, given your health is okay, if something happens to you by the time I walk out of here and like you've paid your first premium, you're covered. What's not to be enthusiastic about?
Well, right. And what you just did was that was enthusiastic. It's not Ned from Groundhog Day. Like you don't need
Right.
to be that guy, but you can still be, kind of up and like engaging. The people that struggle are people that have difficulty being engaging, being interesting to listen to when they talk. It's not something that you can't overcome, but
Mhm.
you will struggle more if you have difficulty sounding interesting when you have something to say.
Sure.
Mm.
I agree. On to the next. So number 2 is pause.
All right. So we watched it. What do you think, Matt?
So number 2, I definitely disagree with.
Mm-hmm.
Final expense or insurance is the number one most selfless thing that you can do your entire life. Because it is something that you will pay for that there's going to be people on there like your family bank and all that's like your blah, blah. It doesn't matter. It's the one thing that you're going to pay for that you will never be able to use. It's essentially like when you die, that's when it happens,
Mm-hmm.
right?
Yeah.
So if I'm buying it, I'm not buying it for me. I don't care about me. I care about my wife and that what would happen to her if I'm not here.
Right.
I don't care about me at that point.
Yeah. No, I'm with you. And like I'm thinking about like the life insurance that I have on me. Like somebody else posted something recently on Facebook about like,
Joanne.
order your priorities. Yeah. Order your priorities, do you want to, where does your life insurance fall? Is it, before your car payment? Is it, before food, before housing? Like, for me, my family is completely screwed over if I die.
Mm-hmm.
You know, like we lose my wife and kid would be destitute. We would lose everything if I didn't have a life insurance policy. I have a fairly large life insurance policy, so you guys can come and murder me, and then I'd probably be okay, or at least they would, and I'd be okay with that. On the other side, the other thing that I do see new agents doing a lot is they do tend to focus on things that clients don't care about.
Sure.
Especially new agents, right? Especially new agents, but not just new agents. A lot of agents do this. My mentor Travis calls it building a watch instead of telling you what time it is. Somebody comes up and asks you the time, you don't build them a watch or tell them how to build a watch. You just tell them what time it is.
Right.
The people who we are talking to have a specific desire. Their specific desire is to have their funeral paid for and to make sure their family is not burdened when they die. And think about it. How often do we hear somebody say that? Like every day we're in the field. That's what they say, right? So if you're not talking about things that are directly related to how you are helping them not burden their family when they die, they are not going to care and they're going to tune out. So a lot of stuff about like riders, a lot of stuff about living benefits, a lot of stuff about how cash value works and how it builds for our clientele. And this is not true for everybody, but for final expense, meaningless. They don't care. They don't care about the underwriting of the product. You're not making yourself look better by showing off how many different companies would take them and what they don't take, and they don't care. They just want to know who will take them. The one company, one that will accept them and give them preferred rates. I was told early on you should imagine that everybody that you talk to has a Post-it note on their forehead that says, "What's in it for me?"
Mm-hmm.
So I don't know. Again, something that requires a little bit of translation. It's, again, not a bad tip. I don't think anything in this video is actually like bad. Like,
Yeah, it's not bad, but I see your point, but you also like see it from my point.
of course.
I guess that's the point of the video, is like you can interpret it however you want to, too, right? So, but you're right. I mean, Pete, they want you for one thing. They didn't say when you called them on Saturday and said, like, I'm going to come talk to you about your life insurance. They want you for one thing.
Yeah.
They don't care about anything else other than who, what, how much, and when.
Yeah. You've been reading the book.
Right?
That's for a future video. We're laying groundwork. So yeah, but that's true, right? So it's really important that you keep focused on that. How much, what kind, who, from, and when.
Right.
So.
Okay. Tip number 3 is on the fact that you should only have like one primary beneficiary and not 3. Like, there's no reason to split a $10,000 policy 4 ways between your 4 kids.
I don't know. I'll let clients do whatever they want in that respect. I mean, I'll give them a suggestion. I always suggest that somebody pick somebody if it's going to be a small policy.
Yeah, well, if it's my thing is, if it's $10,000 policy, I'm like, Miss Jones, like, did they fight when they were kids? They're like, yep. I'm like, they'll probably fight over this too. Who's the one that's the most responsible that that will take care of this, and then that that whatever's left over, they'll split amongst the 4. And so, I kind of explain that as the best practice to them is, choose one primary beneficiary, typically the one that for sure will take care of this, and then blah, blah, blah. But what were you going to say about, like?
I don't know. It's a tough thing because, like, this almost contradicts his previous point a little bit, right? Like, sharing the best practices is sort of about building yourself up a little bit. Like,
here's what my company has done. It's like, well,
right, that's like the opposite of what he was just saying, and that's not. Right. I don't know. I feel like it has relevance to us in the sense that, like, we should be talking to people about why term is not a good choice for final expenses. It's got relevance to us in terms of a variety of things like that. This is why you shouldn't have a mutual Omaha policy for a guaranteed mutual Omaha policy if you're a completely healthy person, or a Gerber Life guaranteed issue, any guaranteed issue. If you're a completely healthy person, why that's not a great deal for you, or increasing term, or anything like that. Like, if you're looking to plan for final expenses,
unless you plan on dying in the next 5 years,
right,
then you probably shouldn't keep the policy that just went up on you.
Right. Same thing with, like, being able to explain how a universal life policy works, and if it's falling apart, what that means, and how to handle that, and what the person's options are. Like, you need to understand how insurance works. Like, you should be able to know this stuff. So if it comes up and it's appropriate to go into it, you go into it. I do feel like that gets back into that watch building territory, though, like, very easily. Like, it's very easy to kind of veer off the path of, what's in it for me, and get back into that. I don't know. That feels like a contradictory tip. I've watched this before, but a couple times, but I don't. Yeah, I didn't. This time, that one struck me as kind of puzzling.
I don't know. Well, I think that's good enough for now. Maybe people that if you're enjoying that type of watching a little bit of a segment of a video and then breaking it down, like sales tips and things like that. If you want us to do more of that stuff, we'll do the rest of that whole video, because I think it's a 16-minute long video.
Yeah. Yeah, we can go on for a long time about that. We can probably do an hour just on that one.
Real quick, I know you just mentioned it. I think it's a good thing to talk about. I don't know what we're going to call this video, just mosh posh of everything we've missed. Yeah. How do you explain, in super layman's terms, how a universal life policy works?
So
to a client.
Yeah, so universal life, we just went over what the guarantees of whole life are. So, whole life is, guaranteed to cover you for the rest of your life. Price is guaranteed to be fixed. It's guaranteed to build cash value at a certain rate, blah, 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 blah. That's part of my regular presentation, how whole life works. Universal life is basically whole life with all those guarantees taken away.
Mm-hmm.
It in exchange for giving you easier access to your cash and flexibility in terms of how much you're going to be making on your monthly payment. They take away your guarantees, and what that means is that in times of market downturns, low interest rates, if you don't put in enough money to fund the policy appropriately, stuff doesn't necessarily stay on the path that was set when you started. For a universal life policy to really function, you have to put in X number of dollars every single month, and any variation that you take from that, they'll let you do, but if you don't make it up, it starts coming from somewhere else. So
It's like a ripple in the water.
yeah, and the
Butterfly
effect,
effect.
it's kind of like you're taking, because they tend to understand how taking a loan against your policy affects them.
Mm-hmm.
So I'll say it's kind of like if you don't make the payment that you were supposed to make, they won't lapse your policy, but it's kind of like you're taking a loan out against your policy a little bit, because you're not feeding your policy as well as it should, and it starts to fall apart. And if you can see, the cash value in this policy is starting to decline, and essentially in 90% of universal life policies, when that cash value hits zero, your policy is gone. There are certain types of policies that don't do that, but this is not one of them. And so you've only got X number of years left in your policy before your policy doesn't exist anymore. So you have a couple of options. You can either start putting in this much more money every month, or we can look at saving what you've got, and taking you into something that's going to be fully guaranteed.
It's good. Sorry, someone just walked in. I explained term. I'm like, term ain't perm. It's like the president, like
right.
The president, like they come in, they go out, they go up, like it's a high face amount for a low premium, and it sounds great on the front end, but after 5, 10, 20, sometimes 30 years, the premium goes from this to this, but your money is here. And it doesn't go up, doesn't go down, right, Miss Jones? They go, yep. I said, so when it goes to here, what do you do with your policy? Guess what happens to all your money? And I legitimately do this in the house. I do like the Napoleon Dynamite. I'm like, all your money goes away, right? And I said, so you have nothing to show for it, okay?
Right.
And that's typically when people give me a call. They're looking for something called whole life, and you've probably seen it on TV, right? It's a fixed cost. The premium does not increase. Your money works like this. Your premium works like this. You're always like, so no matter what happens in the economy, you know that you're going to have the coverage. It's a lower face amount. Now, a universal life is like those two things had a baby. Okay. It's a little bit of a higher premium. It's a higher death benefit. The cost does increase, but incrementally every year, every time that you age, it's rating you at the same death benefit at that age. And it's cost a little bit. And so over time, you'll see it go like this, and it'll get bigger and bigger and bigger. And you're building cash value just like a whole life. The problem is, Miss Jones, is here's your cash value, and here's the cost of insurance. The moment that your cost of insurance is over what your premium is, guess what happens to your cash value? Where does the difference come from, Miss Jones? And they will say, it comes from the cash.
Right.
And I say, now, $2 per month does not sound like a whole lot, right? And they go, yeah, it's not that bad. I say, but next year it's $4 a month. And then the year after that, it's $7. And then it's 11. And then it's 20. And then, and I say in over a 10-year, 15-year period, it ends up being $100 a month coming out of your cash value, or $1,200 a year. And I said, Miss Jones, I've had people that had universal lives for 22 years that at one point before they caught it, they had $30,000 in cash and when we talked, they only had $4,000 in cash value left.
Yeah.
And they go, what do you need to see? You know, and then they pull out the policies and we give them a call. But that's how I kind of explain it.
Yeah.
And I kind of draw it. So I do a visual so they see it. And I say, like, this is your cash value and this is your cost of your insurance. And I like tack it up. I said, now what happens here? Where's the difference come from? And they go, I try to make them answer the question so I know they're involved with the sale.
Right.
So,
which is a good way to go. Asking questions and getting them to participate with you is always a good choice rather than just talking at people.
Yeah. If anybody would pay attention to this tip, I promise you this works in every house. When you're explaining whole life, you say, Miss Jones, whole life works just like it sounds. It's good for your
whole life.
See, and I'm gauging even you to say, but I know that you're paying attention to what I'm saying based on your answer. But if you just sit there and you're like, you're not paying attention to me. So it works a lot. That's a big sales tip. If you're in house, probably doesn't work over the phone. Probably does. I don't know.
Who knows?
These are just things that Nick and I talk about because we like final expense.
Yeah.
We enjoy videos together, and we haven't done one in a couple weeks.
Yeah.
We did a really good job over COVID-19.
We did.
A really good job.
Yeah.
And then things kind of opened up.
Well, yeah, and things got a lot busier when that happened because stuff started getting complicated again.
Yep.
What you gonna do? I'm still at home, but my life got busy also. It's just like it just is how it is. So yeah, I think that's it for the week.
Yeah.
For this one.
Yeah, we're gonna have to. We'll see if we can do something tomorrow and record a bunch of videos. Ryan, we're very sorry. This is probably gonna be the toughest video you've ever edited.
That's why you get paid the big bucks, Ryan.
The bigger bucks.
Appreciate
bigger bucks.
We appreciate you.
Yeah. But we appreciate it. And guys, as always, it's awesome. Thanks for reaching out to us. We actually had a couple people reach out to us and say, like, where the heck are y'all? You're supposed to be uploading on Friday. We're sorry.
Yeah, sorry.
We're going to get as consistent as possible, but it's very tough when you're trying to run your life and make money at the same time on an independent basis. So, we do what we do. We do the best we can, but we really appreciate you guys that do pay attention and reach out to us and said, hey, where are you? And if you have any questions, if you want us to go over some stuff, reach out to us below at theinsurancepanel@gmail.com. Do in the comments. Comment down below. Let us know what's going on in your world. Are things opening up for you guys? What's going on in your world? Let us know. We'll talk soon. Thanks, guys.
Thanks.